I'm Jace Johnson with RE/MAX Realty One, and welcome to your 2024 recap and forecast for the upcoming year. Biggest things to take away from the 2024 season is that, one, a little bit better than 2023, which isn't hard to beat with 2023 being a record low year. But two, biggest thing is that our market seemed to get much older and much wealthier. And we're about to dive into that next. Running through the rest of this video, you're gonna see me looking up, looking down, looking all over the place. I do have some slides that I'll make sure to get up on the screen for you guys to view as well, but I'll be following along on my computer screen. But diving into those housing market demographics that I talked about being older and wiser here, or wealthier, here are a few records that all happened this year. So talking about the aging market, the average age of home buyers increased from 46 years old in 2023 to 56 years old in 2024, which is an all-time high for your average age of home buyers. Another one, first-time home buyer average age rose from 35 last year to 35 this year, also a record high. A record low, only 24% of buyers were first-time home buyers, which is an all-time low for the market and how much they consist of your market share. 26% of purchases in 2024 were all cash buyers, also a record high. And then the median homeowner wealth increased due to huge price appreciation and increased equity in the homes. Another reason for this is how long people are staying in the home. The last quite a few years, we've been seeing that people tend to stay at their home for 5 to 7 years. And now we're starting to see it that it's a lot more likely to be that 10 to 12 year mark, increasing in A, their appreciation, and B, the equity that they actually have in that home. All of that being said, it's been a hard year going off of those stats, especially for those first-time homebuyers. Now, I already mentioned that only 24% of the market were first-time homebuyers, and a big chunk of that 24% needed some kind of assistance, whether it be a gift or a grant from parents, family members, whatever it might be, to help assist them with the purchase of that home. A lot of that is just stemming from our continual increase in home prices, which people have been talking about the market's gonna crash for a really, really long time, and it still has yet to happen. And I'll show you later on in this video that the experts predict that that's not going to happen. So continual resiliency is a big one, but as I mentioned, our market just seems to keep getting older and wealthier in the home industry, which is why later in this video, I'm gonna talk on how I plan to help out, especially those first-time home buyers coming up in the 2025 season. Now, let's take a bigger, deep look into our economic and housing market overview. So I'll follow along with a few slides here that are gonna pop up, but biggest thing, starting over the 10-year treasury yield and mortgage rates. That tends to be the hot topic item that everybody wants to talk about this time of year. On what are the mortgage rates doing, how much home can I afford, what's going on, and probably a big key player into why 26% of purchases last year were cash buyers is just because they did have that high interest rate. We do have a lot more money in equity. People are trying to use that money to good use instead of just sitting on it and letting it collect. So if you follow along with your 10-year treasury yield, the biggest thing you're gonna see is it's been pretty stable throughout all of 2024. We did see a couple key drops, and the biggest points from that were the ISM data release and Powell's comments, and then the other one being the recent job reports that just came out a few days ago. Those have shown kind of our two biggest drops in the 10-year treasury, which also sync up directly on cue with our two big drops in mortgage rates. The one that we saw in September leading up to the October Fed announcement, and then the one that we're currently seeing at the start of this week. From this week, starting December 8th, we saw that there was a significant decrease in prices, almost 1/4 point for that mortgage rate. So it'll be interesting to see on if that's going to hold with the rate cut that is predicted to come in December, or if it's gonna basically do exactly what it did in October. Once they announce the rate cut, the rates start driving back up. So stay tuned, we'll see what goes on there. But as I mentioned, we dropped down to a 6.68% on the average mortgage rate following that jobs report data, marking a 6-week low. Again, going back to that September time where we had a significant drop getting down to 6.1 before elevating back up over 7s. So all that show going into our 30-year fixed mortgage rates trends. Got a slide rolling over that. That's just going to show Freddie's weekly survey and the Mortgage News Daily, which is getting adjusted all the time. You can see as it follows along, once we get over to that December timeframe, which is going to be the far right on our chart, we do have a significant drop. And then going back to that September leading up to October, you can see that we hit that all-time low before, unfortunately, climbing right back up. Good news is there is a good amount of people that are expecting 2025 to be a gradual decrease in mortgage rates, and I know if the current policy or party has anything to do with it, that will be taking over come January, is their goal is to kind of focus on economic growth and where things are at. So driving into other things, we have inventory and demand. So inventory has been a huge problem for the US as a whole. You can see on this chart that we are 26% higher than we were last year, which is huge since we were fighting that real issue of having A, high rates with B, low inventory, making the housing market more of a difficult one to go through. But we do see a steady rise in our current inventory for national single family homes. Now, we are significantly higher than 2023, 2022, 2020, 2021, all of the pandemic years. But as you can see on the chart, we are still much, much lower than we were pre-pandemic, 2018, 2017, 2019. This year, you can see on the chart that we hit a peak inventory at 739,434 units that were available for sale. But if you look at, say, our 2015, we were well over 1 million at that same week in time. So just stating that we are lower than we have been in the past, but much higher compared to the last few years, which continues to show growth, which is huge. Now, coming to demand, this is one that's interesting. If you're gonna pull up the sheets, you can see that your mortgage purchase application index was actually much lower throughout the year compared to 2023 till the last 8 weeks or so. That's where we have really seen the increase. Now, some of that is due to people purchasing with all cash. As I talked about, we hit a all-time high for the highest percentage of people purchasing homes in all cash. So obviously that's gonna drop it down slightly. But again, it's just been a slow year. The industry has seen a lot of things this year, following along with lawsuits, taking away a lot of money from a lot of the businesses, and the high mortgage rates, high home appreciation, which also means high home prices for those trying to purchase a home. But as you can see, we still have that increase in the demand, and there's way, way more where that comes from. If you take a look at a lot of builders, they are currently doing a lot of buy down incentives to be able to sell their homes at roughly a 5.5% interest rate. They've noticed if they can get to 5.5 to that 6 range, they can move inventory well and often. So a lot of that goes into say, once our market can actually get down to those mortgage rates, it should be a floodgate of homes coming on the market. Many people are predicting spring of 2025 is going to be one of the best springs that we have seen in a long while. And a lot of that has to do with economic outlook, where people predict home prices to be, where people predict our mortgage rates to be. But we can follow along on that later. Other things to point out on economic wise, November 2024, we saw that 227,000 jobs were added, with unemployment pretty steady at 4.2%. It's interesting to see where that goes, and I'm skeptical as the reports came out earlier this year where we were way off for a while and they had to make some pretty aggressive adjustments. So I've been taking that one with a grain of salt, but that's where things are currently at. For wage growth, we're up 4% year over year, and weekly hours actually came up slightly to 34.3 hours a week, meaning we're getting a lot more people working that full-time job of 40 hours or a little bit more compared to what we've seen coming off of COVID. But another thing that we keep seeing is wage growth keeps going up. A lot of that has to do with trying to chase down inflation so people can actually afford to live, purchase food, purchase housing, all the good jazz. But the treasury yields did drop following a weaker than expected ISM services data and that job report, as we talked about. Now, getting into what a lot of people are more interested in, and that is what in the world is going to be on the future, on the horizon for the 2025 housing market. There's been a ton of buyers sitting on the fence all of 23, all of 24, wanting to make a move, but it just didn't make sense to them, sitting on low interest rates, maybe even below 3% on their current home, to moving into something at 7. Well, with that starting to tick down and how long people have been staying still, they're predicting a floodgate to open up at a lot of different places once that mortgage rate continues to creep down. So let's start on home prices. Going into home prices, you're going to see a whole bunch of different forecasts. So all the way at the far left, you're going to see Wells Fargo coming in with the most bold statement, thinking that it's going to be roughly a 5% national average increase in home prices. Now, typically you see 3% kind of being the average. So they're going above and beyond, saying 5%, followed by Goldman Sachs, 4.4, Capital Economics, 4, Franny, 3.8, Realtor, 3.7, Housing Wire, 3.5. That 3.7 to 3.3 is kind of the median on where people think. So a little bit better than where we've been, or I guess a little bit better than average, but still showing an increase. I know many people out there are like, oh my gosh, the increases have to stop. But as we can see here, they're predicted to continue to rise. Housing is a hot commodity. People need it. People need shelter. People need a place to live. It's the American dream. But it does all the way go down if you follow, say, Zillow, CoreLogic, the National Association of Realtors, and Mortgage Bankers Association. They're all coming in on the low end, saying things are going to cool off a little bit, but they're still going to continue to increase, with them coming in between 2.6 down to 1.5 as the lowest. But once again, the biggest key factor here is no one is predicting prices to drop. Now, yes, we do see a seasonal decline to where home prices will gradually come down at the end of the year, but overall year to year, it's still increasing in the amount that people are paying for a home. Now, most people, as you can see, are predicting a moderate, stable price growth, signaling a pretty balanced market. That also has to do with us having that increased inventory that we spoke of earlier. Coming into existing home sales. So as we talked about, 2023 was the lowest we have sold since 1993, when we had not even nearly the population that we currently have. So it's pretty easy to beat 23, which we are forecasted to do in 24. And again, it should be fairly easy to beat 24 levels going on. So you can see here with Realtor.com being the most bearish at 4.07 million, a little bit higher than where we've been this year, higher than we were last year, all the way up to the National Association of Realtors coming out saying it's going to be a 4.47 million, which is a pretty good increase from where we've at. That's going to be roughly 500,000 more homes getting sold in 2025 compared to where we were. A few other people, same as the other one, Fannie Mae, Wells Fargo, Housing Wire, Mortgage Bankers Association, Bright MLS, Zillow, with the median coming in at a roughly that 4.2 to 4.25 million sales, showing an increase from the last two previous years. Now, the next one of the big ones that everyone wants to hit on, mortgage rates. What's going to happen? Where are they going? Here's kind of the big target. Overall, the predictions range from it being somewhere between 5.75 to 7.25, with, if you do the math and average it all out, roughly around that 6% going off of the end of the year forecast for the mortgage rates. Now, we are expected to see kind of gradual declines. You can see it in the bottom right corner, that people such as Zillow, Freddie Mac, even if you look at the Federal Reserve rates, they plan to have some slow, steady cuts throughout the upcoming year. All of that should signal that we are going to kind of slowly step down, but obviously they don't want to make any massive adjustments to where we're kind of chasing our own tail. But good news for buyers and sellers that it is going to tick down a little bit, helping out with that affordability. Obviously, with the new presidential election going done, President-elect Trump says for their economic forecast that they're going to try to lower costs for building homes, especially on how they can get stuff done, which should overall kind of decrease. For those people living more out west, take a few of their land that's not being used for anything to try to develop. Now, if you're one of the out east folks, you don't really have any land available to do that with. So that'll be interesting to see where it goes. And then try to just circle all the wagons to wrap things up here. As I mentioned about earlier, that 2024 was a really hard year for a lot of first-time home buyers trying to get into the market, especially when prices have been high and we've been seeing a lot of cash buyers. Most of the time, that's not a case for young buyers. I myself was there this year. I ended up purchasing a home this year and needed to use some creative financing to be able to get it through. So my biggest thing for 2025 is I want to focus on helping out a lot of those first-time home buyers. Now, if you're not a first-time home buyer, don't worry, I'm still here for you. But I am going to launch a few things to try to help out that new upcoming home buyer on how to get into the market. There's been some staggering results showing that a lot of young people think that they will never, ever be able to afford a home because of how much rent has been increasing. It's taking up basically all of their money. They don't have a chance to even get their head above water to put money away to purchase a home. Now, that freaks me out. I want everyone to be able to have a home that they call theirs and they're not just giving it away to somebody else. They're actually using it to grow wealth. If you look at all the stats, most millionaires became millionaires through real estate as one of the prime drivers for that worth. So 2025, I'm going to launch a few things. One of them being first-time homeowner classes. I want to put together a class to show you guys just how you can get into the market. There's creative ways to do it, as I talked about earlier, getting some type of gift from family members to help with, say, your down payment. But there are so many programs out there that can assist you. It blows my mind how many people think that they need 20% down to purchase a home, which is absolutely false. There are so many programs that can get you 3%, 3.5%, 0%, zero out of pocket. The opportunities are endless. So the key is to find a real estate agent or realtor who knows the market, kind of knows different ways to take, and then have a great local mortgage lender in your pocket so they can walk you through all of the different options that exist. So if you know somebody or are somebody who is interested in taking a class, to sit down, figure out how in the world you can purchase a home, let me know and we're gonna get something scheduled before the spring market so you are ready to take it on with everybody else. If there's any other questions, I'll see you guys on the next one. Stay warm and let's rock 2025.